During Tuesday's Asian trading session, spot gold extended the strength from the previous trading day, maintaining a high-level consolidation pattern supported by rising safe haven sentiment, driven by escalating USCU trade frictions. Although it failed to break the all-time high again in early trading, the market's buying support was solid, and the short-term strong trend remained unshaken, with geopolitical uncertainty continuing to provide core support for gold prices. The core driver of gold prices this time still comes from the safe haven demand, caused by tense US-EU trade relations. The previous day, Trump announced plans to impose tariffs on 8 European countries that opposed the U.S. plan to annex Greenland, triggering market fears of a large-scale trade war and pushing gold prices to a record high of $4,690.92. However, the European response to countermeasures further heightened geopolitical uncertainty. French President Emmanuel Macron intends to push the EU to activate the so-called anti-coercion instrument, and the 8 countries are also discussing imposing retaliatory tariffs on U.S. goods worth 93 billion euros. The escalating confrontational attitude between the two sides provides sustained support for gold prices. A weaker U.S. dollar further consolidated the upward momentum of gold prices, dragged down by trade war concerns. The U.S. dollar index DXY continued its downward trend in the Asian session, currently trading around 98.95, down 0.07% from the previous closing. The sustained weakness of the dollar not only reduces the gold purchase costs for non-U.S. dollar holders, but also attracts more safe haven funds to flow into the gold market, forming an indirect boost to gold prices. Meanwhile, market expectations for the Federal Reserve to cut interest rates by 45 basis points by the end of 2026 remain unchanged, further highlighting the allocation value of gold as a non-interest-bearing asset. Technically, gold prices maintain the characteristics of strong consolidation, with the bullish pattern still solid. On the daily chart, gold prices trade above all short-term moving averages, with the 5-day and 10-day moving averages moving upward synchronously, forming a sound technical support. The previous all-time high of $4,690.92 has become a key short-term resistance level, while $4,660, corresponding to the 5-day moving average, constitutes the current core support. In terms of indicators, the Relative Strength Index RSI operates around 70, still in the strong range but slightly lower than the previous day, with overbought pressure moderately released, leaving room for subsequent trends. In the short term, safe haven sentiment and a weak dollar will continue to support gold prices, which are likely to consolidate and accumulate strength in the range of $4,660, $4,695. If it can break the all-time high with heavy volume, it is expected to open up new upward space. If it breaks below the $4,660 support, it may further pull back to around $4,630. In terms of key focuses, the World Economic Forum Davos annual meeting is underway. U.S. President Trump will deliver a speech on Wednesday, and his further remarks on EU trade policy and the Greenland plan are expected to become key variables affecting gold prices. In addition, the upcoming release of core U.S. data, such as the third quarter final GDP and PCE, will influence Fed policy expectations, thereby affecting the subsequent trend of gold prices. All content herein is for reference only and does not constitute any investment advice. Investors who trade based on this information should bear full responsibility for their own profits and losses. Please subscribe, like, and share. Thank you for watching.